points gain. Now, what really underperformed was the Bank Nifty as well as the mid-caps in the trading session today, both ending flat in trades. All right, and we'll take the market action forward. Joining us in today's show is Mayuresh Joshi of Angel Broking. Mayuresh, so good to have you on the show. My first question would be, how do you read into the extreme volatility that we are seeing in markets currently?
Evening, Nisha. Clearly the volatility will continue for some length of time, and we will be hostage to what the global conditions and the global markets put us in. The fall that you're probably seeing with the Chinese clamp down in commodity prices, the risk off will continue in the Indian equity markets. What happens with emerging currencies is another factor point to be watched out for. So largely I think my own take is that the markets will be very, very volatile in the short term, and the consolidation will continue into the Indian markets at least for May. The triggers thereafter would be monsoons, which everybody expects to be much better than what we've seen in the last 2 years, and some amount of earnings respite coming in the next 2 quarters along with the capex revival. So I think consolidation will be the theme for May largely, and again monsoons will be the trigger thereafter.
Oh yes, all eyes are going to be on monsoons, but for tomorrow, Mayuresh, and let me get back to you for your reaction, but first to the news that came in the late evening today, and let's talk about the new bankruptcy law. The Lok Sabha has passed the bill which paves the way, remember, for empowering the creditors who right now have often been struck with a raw end of the deal in these cases. So what are some of those salient features of the bill? First, the insolvency resolution can be initiated by either party, that's the debtor or its creditors, and once the application has been accepted, no new claims can be pursued against the debtor or its asset for the next 180 days. Now, these assets will be taken over by an insolvency professional tasked with the responsibility of assessing the true value of the assets and the liabilities while ensuring that there are no siphoning off by the debtor. Meanwhile, a parallel process will kick in which will see a committee formed by the creditors assessing the possibility of extending further loans to the debtor if they assume that the company can be revived or else chose the winding up option here. So here's another important change which has been envisioned in the bill. On liquidation, the first right over the money goes to the workmen who have or will have to be remunerated for 2 years' pay, followed by the assured creditors, and finally the tax authorities will get their due. So but that's not all the news that we are getting in from that particular space as far as policy is concerned. This is big, and another big development today this evening is that Reserve Bank of India has released a new framework for granting licenses for universal banks on a continuous or on-tap basis. Remember, the regulator has placed a set of draft guidelines on its website, and granting such licenses will be done on the basis of that. And at the moment, the RBI has really asked for comments to be sent by 30th of June before the final rules are framed. So coming to you, Mayuresh, that was the synopsis of all the developments really came in. The insolvency and bankruptcy law, which the markets have been awaiting for quite some time, and also a draft coming in, or a discussion paper coming in on tap licenses. So do you see that a pocket of NBFCs would be spurring high in tomorrow's trade?
Oh yes, sentimentally yes, the NBFCs will move positively in tomorrow's trade specifically, and yes, I think the kind of move that the government has done specifically with relation to the Bankruptcy and Insolvency Act, positive step. Step 2 again I think needs to get clear from Rajya Sabha, and again the entire aspect of the whole thing will be to probably resolve a lot of cases that are probably pending or expected to go into courts. But clearly I think the NPA mess that we are still into, I think that amount of stress will still be carried on to the books at least for the next couple of quarters, to say the least. So a lot of corporate balance sheets still looking under stress, SME balance sheets looking under stress. What has come out of Axis and ICICI's management call is clearly that the stress might continue for a better part of FY17 with increased credit costs, and that might have a bearing. But yes, I think it's a step in a positive direction, and NBFCs, as you rightly mentioned, Nisha, at least for tomorrow's trade, I think they should react very, very positively.
And do you also, Mayuresh, expect a gap-up opening on the back of the bonanza policy announcements coming in today, at least setting the ball in motion, even though it's not definitive in nature at this point?
Oh yes, I think a positive start is not ruled out tomorrow, and I think the global markets again are very, very supportive at this point of time. What happens after that, I think, is again going to be prone largely to how volatility pans out. But yes, I think I'm not ruling out a positive start for tomorrow's trade.
You've already indicated, Mayuresh, that consolidation and volatility are going to be the themes for this month at least. All right, let's take you through the big earnings of the day. They are important ones coming in, and most of the in market hours, these are the stocks which would be watched out for. So Hero Moto, that reported the numbers largely in line with what the market was expecting. Profits are up 70% annually at 814 crore rupees. And Sonia Shenoy is right here to give an analysis of what the numbers really speak about the performance of Hero Moto. Sonia.
Well, thanks for that. It was a steady quarter for Hero MotoCorp this time around, largely in line with what the street was expecting. There were no positive or negative surprises in the earnings. The top line growth was steady at 10.5% on account of a 10% growth in the volumes. The margins, although flat quarter on quarter, have gone up 330 basis points year on year, coming in at 15.6%. The profits have gone up 70% year on year, bang in line with what the street was estimating. The realizations per unit for the company have risen 1.2% year on year, coming in at 43,643 rupees per unit. The management though indicated that they have undertaken many cost-cutting initiatives which led to 278 crores worth of savings in FY16, which resulted in about a 90 basis point savings in the margins as well. Due to cost cutting, they are targeting another 90 basis points of improvement in margins in FY17 because of the cost cutting initiative LEAP. And they also say that the higher commodity costs will start to reflect in the P&L in Q2. The management also indicated that because of the headwinds as far as commodity costs are concerned, the margins will continue to remain in this band of 14 to 15% in FY17.
All right, so that was the big result of the day. Mayuresh, what do you think about Hero Moto? How is the stock expected to react to this particular number? And also, Eicher Motors had also given out their results in the last hour of trade today, in the last leg. So overall, auto space, how it's looking?
No, it's a very decent performance by Hero MotoCorp, and largely I think numbers were in line with what we were expecting. The management commentary again in terms of how EBITDA margins are expected to pan out, largely in line again. There will be some pressure as the management pointed out, with increase in commodity cost, some duty benefits and exemptions going away, and increase in ad spends. But again, I think it's going to be largely led again by how monsoons pan out. A large portion of Hero MotoCorp sales come in from the rural areas, so that will depend on how the motorcycle as well as the scooter sales are panning out. The management commentary also is very buoyant in terms of how the export markets are expected to phase out for them over the next few quarters. The only headwind at this point of time is the sharp rally that we probably witnessed in the stock, and valuations around 17.2, 17.3 times at 517 might pose a little bit of a headwind in terms of capping Hero MotoCorp at higher levels. But yes, nevertheless, I think a positive outcome is what I expect from Hero MotoCorp. For Eicher Motors, I think Royal Enfield has held up exceptionally well. I think the kind of margin performance that has got delivered even in this quarter is exceptional. What you're looking at the MHCV side of the business is equally good as well. And if you're talking about a turnaround story probably happening in terms of how volumes are expected to pan out, the discounting going down, that will have a positive impact in terms of the consolidated numbers. The number of franchisees are expected to increase. The export market share is somewhere where the management is extremely positive about over the next few quarters. But again, on an SOTP valuation, I think the standalone business, the two-wheeler business, is trading around 35 times at 517. The MHCV business is trading around 12 times EV/EBITDA. So I think it's close to its fair valuations from a historic perspective, but definitely I think investors holding on to the stock can hold on, and again a positive start is what I expect for Eicher Motors as well.
All right, so positive commentary when it comes to Motown, but Mayuresh, hang in there. There are some more important earnings of the day to be watched out for, and the ones like FMCG major Emami that saw net profit tumble over 45% to 75.9 crore rupees when compared annually. Now the sharp dip was, remember, mostly on account of the amortization of Kesh King intangibles, the big acquisition that the company made some time back. Total income meanwhile shot up 21%, while the EBITDA was up over 29%. In another earnings, Great Eastern Shipping didn't fare too well either today. The company reported a 57.5% decline in the consolidated net profit when compared to the same period a year ago. And the numbers stood at 58.2 crore rupees. Total income fell 0.8% with the company being hit by an impairment charge of 144 crore rupees. EBITDA and EBITDA margins, those saw a healthy growth though for the company. All right, so those were the earnings of the day, but let's slip into a short breather at this point. But on the other side of this break, we'll tell you about the companies that should be on your radar come tomorrow trading session. Welcome back. You're watching Markets Forward. Let's go straight to the companies that will report their earnings tomorrow. First up, Titan. The company is expected to report a subdued fourth quarter on account of a challenging operating environment. And Agam Vakil, my colleague, joins us with more details on that. Agam, what are we expecting from Titan tomorrow?
Well, it may just turn out to be a challenging quarter for Titan. Starting off with revenues, we're expecting about 12.5% growth. We're expecting a little bit of a contraction in EBITDA margins coming in at around 10.1%. Consequently, we could see the net profits decline by as much as 3% on a year-on-year basis. Now, when it comes to the all-important jewelry sales number, we are expecting a decline of anywhere between a decline of 4% to a growth of 12 to 15%. Now, analysts are split on the jewelers' strike's impact on the jewelry sales. When it comes to the positives, we are looking at the Golden Harvest scheme making up for some amount of contribution to the revenues. We're also looking at a low base at the end of the day, which could actually aid the numbers when it comes to jewelry sales. On the other hand, the jeweler strike could be an important factor which could scale down revenues going forward. When it comes to the watches and the eyewear segment, once again, we're expecting yet another subdued quarter because the discretionary spending has yet to pick up according to a lot of analysts. But on the whole, we are expecting a challenging quarter for Titan, and we'll be keeping an eye on jewelry sales particularly going forward.
All right, thanks Agam for that. And on the pharma space, there is a big company which is reporting its Q4 earnings tomorrow. Wockhardt is set to post its earnings tomorrow. Ekta Batra has been tracking that very, very closely. Ekta, what are we expecting from Wockhardt tomorrow?
Well, for Wockhardt this quarter, we don't have many estimates in terms of what we can expect, but in terms of some estimates that we have, it is expected to be subdued and possibly similar to what they reported last quarter. Now, in terms of a revenue growth, it's expected to be around 3 to 4% on a year-on-year basis. Now, what will drive it, however, would be the India business, which has been showing growth of around 16% in the previous quarter, 22% in Q3 of FY16. So that kind of trajectory should support in terms of total earnings. But what would possibly disappoint will be the sluggishness in the US business. Remember that the company does have US FDA issues on 3 of its US plants, which is Balod, Chikalthana as well as the Shendra facility, and hence the US business is expected to continue being sluggish. For example, last quarter it was down around 1% year-on-year, and in the previous quarter it was up only around 2% for Q2 of FY16. Now, in terms of margins, the street is expecting margins to be maintained similar to what they did in the same quarter last year, so around 11.8% versus 12.6% on a year-on-year basis. But remember that last quarter it was a bit of a disappointment when the margins in fact slumped to around 7%. Watch out for R&D expenditure because that has been continuously rising, and the guidance on the same would be something that the street would like also. Around 151 crores is what they did in terms of R&D expenditure last quarter. In terms of other key drivers, besides India, it would also be the UK business, which was up around 14% in the previous quarter. So overall, subdued quarter expected for Wockhardt, but commentary with regards to the US FDA issues and where they stand would be something the street will be watching out for very keenly.
Oh yes, that will be on our radar too. Thanks Ekta for those details. So Titan and Wockhardt to be watched out for. But Mayuresh, thanks so much for waiting by so patiently. Coming to you on pharma in particular. Of course, even though today was a volatile day of trade and it was a very stock-specific action day, but pharma in particular, there were some key stocks which were in the green and comfortably running up today. What do you think about the entire space? Wockhardt is coming out with results tomorrow, and regulatory concerns, especially US FDA concerns, have been weighing heavy on this particular sector in India.
Oh yes, I think the pharma sector has got deeply impacted by the FDA concerns that have been raised. A lot of plants probably inspected, 483 raised, and that probably raises concerns in terms of earnings estimates for a lot of these pharma plants which have gone under the scanner. Again, I think the resolutions for all these FDA issues is a very time-consuming process, and the exact estimates on how the process will be resolved is at least 4 to 6 quarters away. So having said that, I think the regulatory issues will weigh on Wockhardt. The other plants which have got inspected very recently of a lot of pharma companies, I think that stress on balance sheets will continue, and the earnings estimates specifically from an FY17 perspective has been cut down. So in my opinion, I think within large cap names one has to be really stock specific at this point of time, because we do not foresee a huge amount of earnings upgrades probably coming through. All pharma companies probably have got a very strong NDA pipeline, Nisha. So I think individually, I think which NDA applications go through, what kind of market potential they carry is going to be equally pertinent for a lot of these pharma companies.
All right, so those will be watched out for, but Mayuresh, can't let you go without asking. We are in the midst of earnings season at this point. So far, whatever earnings have come out, what has been your assessment so far in this one?
It's been quite reasonable, Nisha, so far. So I think the IT companies, except the guidance that probably was given out by Wipro, the EBIT guidance by HCL Tech, I think largely they have delivered. A lot of companies, even from the auto space, the cement space, have probably delivered. But I think the second part of the earnings season, which is the PSU banks, the capital goods, the infrastructure stocks, I think you're going to see some amount of pain still persisting on that front. So I think the first half was quite reasonable in my opinion. The second half, I think, is going to be more challenging in terms of all the sector results that are probably coming through, which have been stressed at this point of time.
All right, Mayuresh, thanks so much for your valuable insights on the markets. It was great having you and chatting with you on the show this evening. Thanks so much. It's time for a short breather on Market Forward, but coming up on the other side, Vishal Malkan.